Welcome to today's stock market news update. The month of September kicked off on a challenging note, with the S&P 500 closing down roughly 0.7% on the first trading day. However, it wasn't all negative. Google's parent company, Alphabet, saw its shares surge over 6% in after-hours trading. This came after a ruling that Google won't have to sell off its Chrome browser or divest the Android operating system, though it must end exclusive contracts. Staying with tech, Nvidia experienced its longest losing streak since March, trading in the red for 4 consecutive days. As a leader in AI and semiconductors, Nvidia's performance is closely watched, and extended declines could signal broader pressures in the chip industry, possibly affecting supply chains and growth expectations across tech-heavy portfolios. Turning to US economic indicators, residential electricity costs hover near record highs. This matters for markets because higher energy expenses can squeeze household budgets and corporate margins, potentially contributing to inflationary trends or shifts in consumer spending patterns. In fiscal policy news, President Donald Trump's tax and spending law has been highlighted for delivering the largest net gains to the top 10% of earners. Such distributions could spark debates on economic inequality, influencing policy discussions and market reactions to future tax reforms. The commercial real estate sector is facing challenges, with office buildings sitting vacant. Inflation-adjusted property values have dropped 26% over the past 3.5 years, leading many landlords to give the keys back to their lenders and walk away from underwater loans. This downturn is significant as it could pressure banks' balance sheets and local economies, with potential ripple effects on broader financial stability. US manufacturing activity has contracted every month since Liberation Day tariffs were announced, with reports of countries boycotting American products, which is hurting businesses. This persistent weakness in a key sector could weigh on economic growth figures and trade balances, prompting markets to reassess industrial outlooks. On the trade front, the US suspended the de minimis exemption for low-value imports as of August 29th, meaning goods valued at $800 or less will face country-specific tariffs. In response, over 25 countries have announced they'll pause shipments to the US while adjusting. This policy shift is noteworthy as it could alter global supply chains, import costs, and inflation dynamics, potentially reshaping international trade flows. The US is set to sell a record $100 billion in 4-week treasuries on Thursday. With an estimated $2 trillion deficits for this year and $40 trillion in federal debt looming, this highlights fiscal pressures that could influence interest rates and long-term market sustainability. Shifting to commodities, gold broke above $3,600 per ounce for the first time ever and is up over 33% year-to-date, more than 3.5 times the S&P 500's return. Gold's role as a hedge against uncertainty makes its performance a gauge for global risk appetite, potentially signaling investor moves towards safe assets amid economic or geopolitical tensions. Diamonds, often seen as a luxury investment, have hit their lowest prices this century. This plunge could reflect changing consumer preferences or oversupply, impacting the jewelry and mining sectors. In a lighter but notable development, California Governor Gavin Newsom announced plans to launch a meme-coin called Trump Corruption Coin. Now let's broaden our view to international economies and geopolitics. Eurozone inflation climbed to a hotter-than-expected 2.1% in August, up from 2% in July, while core inflation held steady at 2.3%. These figures, just above the European Central Bank's 2% target, are crucial as they could guide interest rate decisions, affecting borrowing costs and economic momentum across the region. Australia's GDP expanded more than anticipated, growing 1.8% year-over-year and 0.6% quarter-over-quarter, the fastest pace since September 2023. In Japan, the 30-year bond yield reached an all-time high of over 3.3%. Rising yields often indicate expectations of higher inflation or tighter policy, which could impact global bond markets and carry trade strategies. Over in China, margin trades in stocks hit a record 2.28 trillion yuan on Monday, topping the 2015 peak, with leverage buys now at about 2.2% of market cap. New retail accounts jumped 71% year-over-year in July, and hedge funds focused on equities saw record registrations. This surge in borrowing for stocks could amplify market swings, as high leverage often heightens volatility in one of the world's largest economies. China's electric vehicle makers reported a rebound in deliveries for August, fueled by cheaper new models. BYD shipped 371,501 units, up nearly 22% from last year, while NIO, Leapmotor, and XPeng hit new records. BYD sold over 4 million cars last year, 10 times its 2020 figure. The EV sector's recovery is key as it reflects demand trends in green tech, potentially affecting energy transitions, supply chains, and competition in global auto markets. Geopolitically, China's Victory Day parade featured a massive weaponry display, with leaders Xi Jinping, Vladimir Putin, and Kim Jong-un standing together. Xi warned that the world faces choices between peace or war and dialogue or confrontation during the 80th anniversary of World War II's end. This event, during US and China tensions, could highlight alliance shifts, influencing markets through potential impacts on trade, sanctions, or defense spending. In a related post on Truth Social, President Donald Trump questioned whether Xi would acknowledge US support in World War II. In the same post, he also said, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." This follows Indian Prime Minister Modi's recent visit to China on trade and a virtual BRICS meeting set for September 8th. Such moves could heighten geopolitical risks, affecting currency values, energy prices, and investor caution toward emerging markets. Russia and China signed a major deal for the Power of Siberia 2 gas pipeline, enabling 50 billion cubic meters of annual supply for 30 years. As Western nations shun Russian energy, this deepens ties and could redirect global energy flows and impact prices. India is reducing its exposure to US treasuries while increasing gold holdings in its foreign reserves. This diversification strategy could signal broader shifts in global reserve management, potentially pressuring treasury demand and increasing gold's appeal as an alternative asset. Finally, in fintech news, Swedish giant Klarna is aiming to raise up to $1.27 billion in a US IPO on the New York Stock Exchange. The offering includes about 34.3 million shares, priced between $35 and $37. Known for its buy now, pay later services, Klarna has expanded into debit cards and deposits. Its June quarter revenue rose 20% to $823 million, though net losses widened to $53 million. That's all for today. Be sure to hit the subscribe button to see more daily updates.